The Federal Reserve cut interest rates for the third consecutive month. The central bank slashed rates by 1/4 point. It's the Fed's final decision on interest rates ahead of the inauguration next month. The president-elect, Donald Trump, has been a longtime critic of Federal Reserve Chairman Jerome Powell. CBS News MoneyWatch correspondent Kelly O'Grady joins us now. Kelly, great to see you here in Washington.
It's good to be here.
Welcome to Fed Day here in our nation's capital.
My favorite day.
Well, I would hope so, because you're on the beat. A lot of eyes, obviously, on the effect that this could have on inflation. So given that they've done this now third consecutive month in a row, what kind of changes could Americans anticipate?
So look, this is going to flow through to everything from your credit card rates to your auto loan rates. Mortgage rates, probably not. That really moves more where investors think inflation is going, and we'll get to that in a second. But you are going to see some relief. I think where there is concern is that we have seen inflation tick back up. So a lot of folks were saying, okay, does this really warrant a cut when we are seeing the data get away from the Fed's 2% target?
So what does 3 straight rate cuts to the end of the year say about the state of the economy then overall?
So look, the job market is in a strong place. It is cooling, but it's still in a strong place. Like I said, inflation's ticking back up, but a number of us pressed him today on what this means for the economy. Take a listen.
I think if you go back 2 or 3 years, many people were saying that to get this far down, we would have had a deep recession and, high unemployment by now. Well, that has not been the case. So, the path down has actually been much better than many predicted.
We also got from them today that they aren't going to be cutting rates as much as expected next year. We're only going to get roughly a half-point cut over the whole year versus a full point that we were expecting. And investors, people were saying, whoa, that's not what we were expecting. And sort of that cautious tone spooked people.
And it's now caused 10 straight days of losses at the Dow, right? I mean, how concerned should we be about that?
So look, these market reactions, they can be very visceral in the moment. But yes, I mean, the markets reacted pretty negatively because investors were hoping for more cuts next year because companies can use that to invest in AI. Consumers will go out and spend more. And now that outlook is a bit more murky. But like I said, the investors are always very visceral in the moment. I always love putting up the Dow while Fed Chair Powell speaks, because then it goes either like this or like it goes down or it goes up very quickly. And you saw that happen today.
Well, and there is a guy who tracks that stuff pretty closely named the president-elect, who's going to hear them say we're only going to cut that much in the next year, and that may keep inflation. I mean, to what extent does what they're going to do, the Fed, get influenced by what the Trump administration either would like them to do or will be doing itself once it takes over?
So definitely the second. And actually, a number of us were saying, President-elect Trump is talking about tariffs. That could cause inflation. Are you thinking about that at all right now? Fed Chair Powell said, look, we don't know what the policies are going to be yet. We'll look at them when they happen. But certainly, if the president-elect does put those tariffs in place on day one, that will factor into interest rate decisions.
And we should remind people, the Federal Reserve, of course, independent of the president, any decisions he makes. But obviously, in this town,
right.
It's a small town. They bump into each other. Kelly O'Grady, great to see you. Welcome to the apostrophed correspondents club, as I like to say. We appreciate it.
Great to be with you.